Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Network 18. Should one invest in this company trading at 40 rupees or one should avoid? So let's understand this. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Network 18, here's a small request that you kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions on a daily basis. Once you get the $10 membership, you will have access to my portfolio, my watch list. You can ask me questions daily, one question on anything regarding markets, and you will have access to podcast, a number of podcasts that I put up on Patreon with respect to stocks, their movements, and whatever I think about the markets. Now about Network 18, established in 1993, it is an Indian media and communication company owned by the Reliance Group, arguably number one network of India with respect to business channel, and they have entertainment and other bouquet channels as well. 16 channels, 70 crore viewers, and 15 languages is what they work at. A number one business channel that they have, and we would all agree with respect to the English business channel. The market cap of the company is around 4500 crores or so. Have business, entertainment, and news channels as well. So it's not just a news channel or a business channel, they have entertainment channels via Viacom 18 and other groups. So a lot of bouquet of you can say entertainment network that they have currently. If you look at the financial, and this is the Q1 number that have come in, and that was expected to be not that great. So the sales have dipped by around 36%. Profit, there was a loss of 116 crores, which is reduced to 58 crores, and which is extremely good. So it has performed well over the last 2-3 quarters. So over the last 3 quarters, they have come up with very good profitability, or they have cut down on their losses. There's high promoter and institutional holding in the stock, although the company has high debt, and this interest cost is really eating into their margins, although they have been doing well since the shutdown had been announced in March. So we were expecting very good numbers. They have produced decent numbers with respect to the situation that India was facing, but you look at the return ratios, all ratios are in deep red, negative. If you look at the stock performance, so stock is still down 30% from its 2018 highs. So there are many chemical, pharmaceutical consumption companies that are reaching or has also gone past their 2018 highs. But in case of Network 18, we are still struggling. Had fallen around 50% in that Feb March fall. Has recovered smartly from those lows. So the lows were made at around 25 odd rupees, 20-25 rupees, and it went to 45-48, so nearly doubled, but then has also gone down post the numbers. So it's currently trading at around 40 rupees, and that is a crucial support. I'll discuss that when I talk about the technicals, but it has gone down after a surge, and which is slightly perturbing, slightly difficult for investors to really fathom when you consider that we have had work from home, we have had people watching more television, and yet we have had more advertisements on CNBC TV 18. We have seen that they might be getting more ad revenues, but it is, I think, the debt that is eating into their whatever profits that they would have made, and that is why they're not making decent profits in this quarter. But then you have to understand that the losses have reduced significantly. So if you look at the technicals of the stock, and I was talking about it earlier, so stock has remained robust recently and is breaking out. So it was trying to break out from that 48.50, 54 range, and I think it touched a high of 53.54. But what has happened after that is that we have seen a decline, and currently it is trading at a very strong support today at 40. So 39.40 is a very strong support. If that falls, then we could be looking at 32 levels, A 200 DMA lies at around 29, so one can keep a deep stop loss of 30 rupees in this. If one wants to trade in this stock, then keep a 10% stop loss if you buy today. So 36 as your stop loss and trade. I don't think you can look at investing into the stock until and unless the stock crosses the 60 rupee level, which is still far off from here on in, because technically speaking the stock is extremely weak. Fundamentally speaking as well, I think there are many other companies which are making very good profits in other sectors that people are looking at. So why would you want to get into stock like CN, like this TV18, and why would you like to get into it for the next 2 3 years and get stuck where you can make good amount of money in other consumption plays, etc. So if it crosses 60 with strong volumes, then a new uptrend might begin that could take the stock higher to 90 and even 120 levels. Otherwise this could be struck between 55 and 35, and you might not be able to make a lot of money even after holding for a longer period of time. If the 200 DMA at 2930 gets broken, then we are looking at the recent lows or the lows in March, which was around 17 18, if I'm not wrong, below 20 levels. So it is precariously placed at the moment, technically. So what needs to be done? Well, I guess one needs to understand that you can buy at current levels if you have a trading view. You cannot have an investment view in such a stock in which the company, although has made good profits in the earlier 2 quarters, is making losses, and these are numbers which are errant, and the stock price is also not making you very confident into investing such a company. So may do well till economy is closed. I still believe that the next 2 quarters might be decent. We could see 50 52 levels on the stock, but there are other companies which are doing exceptionally well and which you can buy and sit on for a longer period of time. So I would avoid such companies as Network 18. I would look to get into either the parent company Reliance Industries itself, or into companies such as you can say in the pharmaceutical or in the consumption sector, which are larger companies than Network 18 itself. If you have it, then keep a stop loss at 36, that's my opinion, or at best at 29, which is the 200 DMA. Don't lose a lot of money, lose 20 30%, save around 70% of the money, and invest in decent, very good quality, high growth companies where you can recover the money as well. So this was my video on Reliance Industries. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. And also visit my Patreon website, and I hope you'll like what I'm presenting there with podcasts virtually daily, etc. And support me there as well. Thank you.